Tell me how you do it. She won't tell anyone. She said to feel better if you only just tell her. Take the blindfold, like we're having fun.
Hey guys, welcome back to Crypto Mischief, where I talk about my favorite thing in the entire world. Still, cryptocurrency. Goddamn cryptocurrency. Today we're going to be making a little bit of a different video than usual. I'm going to be looking more at the bigger picture, right? We're going to look at other things outside of the actual scope of cryptocurrency, because it's all kind of tied together at the moment, isn't it? And we can really get that feeling. We have, you know, the housing market, we have inflation, we have interest rates, we have the general amount of cash, right? Liquid cash that people are able to hold or save these days compared to what was, you know, happening couple years ago during the old pandy. I can't say it, I'll get demonetized. And then after the discussion on these factors, which I think are really affecting the cryptocurrency price, which is the thing that we're mostly concerned about, right? We're going to be talking about some projects where I'm hedging my bets and putting my funds, and I'm quite happy with the returns I'm getting at the moment. None of this is financial advice. This is more of an open discussion video because I don't really feel like talking about any new projects in DeFi when the whole market's crumbling, but I do have one that I'm going to be talking about tomorrow because you can't keep a good degen down. So how about let's have a look at the market. Oh god. Oh, right. This was improving earlier and it's gone worse again. So it looks really like we just have to pay attention to two things in this market. I really think Bitcoin and Tether, that's pretty much it. It's going to tell you the entire tale of the tape. Bitcoin is battling with holding on to $20,000 at the moment. Do I think it will find support? No. I'll explain my reasons in this video, right? Coming to, you know, the brutality that we've seen in the past 90 days through the Bitcoin market, it has really had, you know, two massive, horrible times. We remember this on the 5th of May, the Terra Luna collapse. That was the kicker for this first one, where we did drop from 40 down to 30, and now the second kicker being this Celsius kind of the locking people's crypto, not your keys, not your crypto kind of idea, not your keys, not your coins, right? And that was the kicker, to instigate this second decline from 30 down to 20. It seems really like in the past 3 months, it has just been one piece of bad news after the next, which has really just been destroying our Bitcoin price. And with that, the rest of the market falls. Why I say we should really keep our eye on Tether as well is because, is it the last bastion, right? We do have USD coin, where I keep most of my stables now, right? I keep them in USD coin and I keep them in Binance USD. I have moved almost all of my positions out of Tether because of the shakiness, right, that it's currently showing, and it does worry me. Would this be the one which is going to eventually, you know, we'll look at the 30-day on it. Is Tether going to be the one that's going to be the next catalyst for Bitcoin to go down to 10, right, or is it going to do it by itself? I'm not sure, right? So, you know, we've seen some extreme lows here, we have not seen Tether being this shaken for a while. You can just see here from the all-time, right, how flat we were here, very flat. And the volatility, even in this all-time chart, is really starting to come out now. See the volatility of this. It's getting shaky, right? So it's holding steady. So no reason to throw your toys out the pram and, you know, run for the hills or anything. But they're the two I want to look at. You know, people are scrutinizing stablecoins at the moment. If we do come to one that I was in, I pulled my position earlier. I completely forgot about it, actually, and then someone mentioned in my Telegram channel, link in the description for the Telegram channel, right? He did mention that USDD, the Tron algorithmically backed stablecoin, was losing peg too. It's down to 96 cents on the dollar. So I did pull out of that just to wait and see what happens, because it's looking pretty fairy, right? So, as I said, I don't think this is all down just to, you know, Celsius stopping withdrawals and Terra Luna collapsing, okay? I think that the price of Bitcoin overall has a lot to do with the outside market, right? Specifically to do with interest rates, and we're going to have a little short lesson on what an interest rate is and how it affects the world markets, right, of housing, stocks, and of course, Bitcoin, right? Is it a coincidence that this fall in the general, because before this initial dip here, we were holding 30 quite strong and quite steady, just having the general dip on the Friday, then coming back up on the Monday, as Bitcoin generally does anyway in any market, right? But this came about just at the same time that the Fed in the United States and probably the British government, also Treasury, coming out and, explaining that they will be increasing interest rates, right? So what is going on there? Let's have a look at this first. Savings rate versus inflation rate. So as you can see here, this is going back to 1958, all the way straight up until today. And we can see very clearly that in the blue is the amount of money that we can save, was dipping until about the year 2000, right? And now we've had an exponential growth of the amount of cash that we're able to save, okay? But in the very recent future, as in the past 2 years, the saving rate has gone down from 12.6% at the highs of last year when everything was fantastic, right? And Bitcoin was pumping, everything was pumping, stocks were pumping, right? And we're now down to a saving rate of 4.4%. That is, people can now save, or able to save, on average 4.4% of their income. Whereas the general inflation rate has shot up by about 10%, right? From where it was a year ago until now, we're up 10% on what that was. So before we begin deep diving into this, we need to have a little bit of a talk about what exactly interest rates are, right? They depend on between the borrower, the lender, and the saver. For example, we could use something in DeFi such as Aave, right? Which is a crypto lending platform, which also does have interest rates, right? I would take some, for example, tether, right? I would put that tether into Aave and I would borrow out more tether. I would get an interest rate, two kinds of interest rates for that, right? There would be the borrowing interest rate, right? Which I would be paying to Aave, because by putting in my tokens into Aave, then I'm borrowing out more tether, I'm gonna have to pay an interest rate on that. Usually it's about like 1.75 APY, okay? But also to borrow money in Aave, I need to supply capital into Aave, right? And this would essentially be my interest rate of how much I'm earning from lending my capital into Aave, right? So there's two rates there that go on in Aave. So essentially an interest rate is the amount of money a lender or a creditor charges for the access to this funds. Different things determine interest rates. We're now talking about banking, okay? The Fed in the US, right? The US Treasury notes and bonds and the banking sector all determine the interest rates. And the way that they work is kind of like a sexy dance. Yeah. It's a sweet spot science even for financial institutions who lend money and extend credit. The goal is to issue interest rates in that sweet spot where the rate is high enough for lenders to make money but low enough to attract borrowers. So then rising and falling interest rates, what do they mean for the overall economy? So let's look first at rising interest rates. What does that mean? Rising interest rates make the cost of borrowing money and getting credit tougher to obtain. That not only hurts consumers and businesses like us who can't get the cash they need to buy a home or hire new employees by borrowing cash, right? But it also hurts financial institutions too. After all, with high rates and conditions on the lending front, that leads to fewer people borrowing and fewer revenues and profits for banks, credit card firms, other financial service companies, or even Aave, right? It means less business for retailers as customers make fewer purchases on goods like clothes and cars, thus hurting the bottom lines of US companies too. So when the interest is going down, declining rates of interest, lower interest rates lead to a multitude of financial problems and benefits for consumers and financial service firms. In a lower rate environment, consumers and businesses often slow down savings and increase their debt, as loans and credit are easier to obtain. I can go to the bank, I can get more money, therefore I don't need to save as much as I used to. Weaker rate levels also spell bad news for bank savers and bond investors, and investment returns fall as rates decline. But on the plus side for lowering interest rates, a lower interest rate means more opportunities to buy big ticket items like homes, autos, Bitcoin, which is good for the overall economy. Plus, stock market investors usually do better as rates decline and the economy improves, as companies make more sales and earn more profits, which are good for their bottom lines and good for stock prices. So essentially, saying declining interest rates are great for stocks and cryptos, and rising rates are not. because we cannot get the capital that we don't have to purchase and buy that dip. So as we can see here, as inflation rises generally, right, interest rates rise too. So higher interest rates are the central policy for bringing down the rate of inflation. Higher rates work by increasing the cost of borrowing, as we talked about, and reducing the incentive to spend and invest. Over time, higher interest rates will reduce the rate of growth and reduce inflationary pressures in the economy. If higher interest rates do not bring inflation down, then this will help tackle the cost of living prices. Because things are getting more expensive because of inflation. As we all know, we have less disposable income because of this inflation that's going up. So in theory, it should help tackle the cost of living crisis because items are going to be getting cheaper if interest rates go up. Higher interest rates will also do something to protect the real value of savers. With UK inflation at 9% and interest rates at 1%, this is a record level of negative interest rates. Your money is devaluing by 9% per year, but the interest rate is only 1%. Terrible. So America's inflation headache gets worse. This is from a couple days ago in The Economist. As prices soar and markets tumble, and the Democrats may be next. So they're instigating that maybe the whole entirety of the American government might collapse because of this. I think that's a little bit extreme, right? So then where is this going to go, and what is it going to do to impact the price of our main, focus of this channel, which would be the price of Bitcoin? If they do raise up these interest rates, which they are doing, that will mean that inflation may well be tackled. Yeah, the value of the dollar may raise, but at the same time, we're playing a very dangerous dance, a dangerous tango with the real idea of not only a recession, but a crypto recession. This is bad news all around, right? Bitcoin is down 70% from its all-time high of 69,000. We may just be going lower. Do I think Bitcoin is going to break below $15,000? Yes, I do. Do I think that Bitcoin is going to be dropping below $10,000? No, I don't. I think we're almost reaching this bottom. I think we might probably bounce between 10 and 15. But as I said, I'm not a financial advisor. I just thought I'd sum you up on my thoughts on all of this. But as I said, right, raising interest rates do mean that it's going to be more difficult to borrow money. The average amount of cash that the general Joe, right, general consumer that's going to be able to save is going to be less and less, okay? If the raising interest rates don't battle the inflation in the right way, then we will probably be seeing ourselves falling into a very deep recession in the stock market, which would mean also the housing market may just pop. Okay, these are the huge dangers. Will Bitcoin be able in any way to be a hedge against any of this damage? I am very skeptical about that. That's why generally I'm holding most of my capital at the moment in stable coins and waiting for the collapse. Good news, huh? So in that case, if I am saying and I'm predicting, right, this is me, I'm putting out a prediction, I might be wrong, I'll eat my cat if I'm wrong though. Probably if Bitcoin is going to be hitting down to about $15,000 to $10,000, okay, what is that going to do to the alt market where, primarily a lot of the things I talk about are in the alt market, right? This is a very rare video. I don't generally talk about these kind of things. As you can see, the total market cap of crypto has now gone below $1 trillion. Now, this has been a while, right? Maybe goes back about 2 years when it flipped over 1 trillion and we were all ecstatic about this huge change. And that's, it's down to, 32% loss in Bitcoin, but always with the cryptocurrency, whatever Bitcoin does, the rest of the market generally follows in a worse way. And we're not, it's pretty obvious that this is still happening, but really the question is how much lower can alts go, right? Solana, from an all-time high, what was the all-time high for Solana? Where we're getting close to $200, I believe, on Solana. Yeah, $259. It's down 89% from its all-time high. How much lower can these blue chip assets go than 95% down from what they are? So, to be honest, I think that most of these assets are pretty much already mostly floored, right? I can probably still see another, for example, BNB down to $150 or $100. Very, very possible. I do believe so. So it is another 50% drop for all these alts. But I think, you know, we've already suffered so many massive losses that we're kind of we're weathered to it now. So I do have some alt plays. I mean, for long-term plays, I just hold my Bitcoin, hold my ETH, hold my BNB, hold my, you know, Solanos, hold my Polkadots. It's every single blue chip I'm just holding now. I don't really feel like stressing or shorting anything or trading my way out because, you know, but most of my portfolio, as I said, is in stable coins. It's in USDC, it's in USD, it's in MIM, some is in Tether, yes, some is in DAI. I've spread it across a lot of stable coins because I'm not sure which one is going to fall first or next. Next, I think another stable coin will fall before this is all done with though. So what I do, so you know, I'm in Drip. Drip has been a fantastic platform. Of course, the price is way down. As of most things, it's down 90% from its all-time high. Right, and that now at probably 95% actually. It's at $9.71 at the moment. I really don't see Drip going lower than $5 now, which is why it's one of the best assets that I think I can really hold on to. We do use the Drip faucet. You deposit your Drip into Drip faucet, you get paid out 365% on your deposit over the space of 1 year. That's 1% per day. You can either compound that or you can claim it, sell it into BNB, then sell it into whatever you want on PancakeSwap. That is Drip. It has been fantastic, as you can see. It also does have a team building affiliate bonus, which some people will turn their nose up at, but Drip has been running now for 1 year and 4 months, and it is still going today with over 100,000 wallets deposited into the faucet contract. You can also use your Drip as a utility by going into the garden contract here. You would go to the animal farm, animalfarm.app. This is the site here. If you go to garden, it will take you to the old site. It's not yet updated, where you would be able to go to the liberation contract, which is this one here, Drip Liberation. Drip does have a 10% tax on it, right? If you want to purchase it, that's why it's best to buy Drip on drip.community. Go to the swap page, pay your BNB for Drip. It's on the Binance Smart Chain, by the way, right? But if you wanted to make a liquidity token with Drip and BUSD, you would have to use the Drip Liberation contract because you don't want to pay that tax. So for example, you could take your Bitcoin, you could then convert that, using that token, send, 0.1 Bitcoin into the Liberation contract. It would then supply you with Drip BUSD tokens with no tax. You would then go to the garden, you could deposit into garden for 3% daily variable on that, right? The garden is fantastic. As you can see, for the day I have $536 to withdraw or compound as I wish. We also do have the animal farm, which is just released. Yeah, this is another ecosystem of the Drip network, which is, as you can see, if we go to the farm section, they just have now updated their pools, which are opening very soon, I believe within 1 week, where we will be able to take Drip BUSD in here and we can farm for pigs token. The pigs token you can then go into the pig pen with. By holding your pigs in the pig pen, you will earn daily rewards of BUSD token and pigs token. This ecosystem is all-encompassing and all around. And I'm hedging my bets that over time, this is going to explode out of the gates once again. 1 year, 3 months old, not going anywhere. Fantastic developer, one of the most creative and hardworking developers in the entire crypto space. So many have fallen in this DeFi race, where he is still going stronger and stronger every day, working with purpose, working carefully, slowly, and continuing to hold this entire ecosystem on his heavy, heavy shoulders. Praise to Forex Shark. We also do have the piggy bank, which is similar to the garden, but we can also take piggy bank and gift piggy bank stakes for people who use your affiliate link. This is fantastic. Another great project would be DEX Finance. If we have a look at the prices on DEX token, right? DEX is currently $1.30 for the DEX. As the whole market is dropping, US DEX is 2.6% up on the day. If we come to the 30 days on this, it has been running fantastically. And even today, on a down day, I have some yield to collect. What I do is I pair my USDC, dollar-backed, collateralized stablecoin with US DEX token in here, and it earns me yield every day. I get 350% at the moment APR on that. It's been fantastic. As you can see, the price action on US DEX in the last 30 days, it's been brilliant. All-time low of $1.21, all-time high of $1.48. Great. Okay, so it is very doing great. It does have a lot more to it. You're gonna have to watch my other videos on it. There are two projects I'm going to look into today. The last one would be the stablecoin farming opportunities that are available on tomb.com. We can either come into two options for this. We have a 90-day genesis period, which is now 1 day old. So we have 88 days, on this, where you can take your US dollar and you can farm with this to earn yourself the life token. So as you see, for the day, I have $34,000 in here, and I've earned 131 life token, $79 today, right? So this is going along very well. 15% APR, nice, slow, steady yield for 88 days. I'm just going to enjoy my summer with this, right? Symmetry V2, you can also pair up your stable coins, get them into here as well. You have high yield options, but you can also come down to the stable coin pools. If we are really afraid in this market, you can choose which stable coins you believe are going to be the ones which survive. So I've gone with USDC and MIM, where, as you can see, I also have beginning to stake up a balance of this, where you're earning the L share token. Okay, so one earns you life token, the other earns you L share token. And I've put in about $3,000 into here, I believe. So that's some fantastic projects which I've been hedging my bets on in this horrible market. I just really wanted to kind of been thinking about this over the past couple of days, since I did see the Fed hike idea for interest rates in the US, and I really do see that it is more and more correlated together now in this market. So what are your thoughts, right, on the tie between inflation, interest rates, and the crypto price, right? The stock market and crypto price, the future. Are we going into a recession, a worldwide recession? Are we heading into a crypto recession? And, you know, the big question is, do you think, how far do we have left to fall? I've been Crypto Mischief. Last thing really for today would be, if you are having any kind of mental anguish, right? Or if you have lost a lot more than you were willing to lose, which I always say that you should not do, okay? This is essentially a huge casino, okay? You need to relax, calm down. We're all there for you too. Your mental health is just as important as your financial health, right? Always get perspective, and always make sure that you look out for yourself in any kind of way possible, especially if it's coming to your mental health. And, you know, do not feel like you are alone or you have lost, because we always have a second chance. And those who don't sell never lose in the world of crypto. Don't get wrecked.
That's right.
Tell me how you